Hi, my name is Lincoln Holbrook, and I'm excited that you've chosen to come back for a third video where we're going to teach you how trading can be a process and show you how the markets are rigged and how they can be rigged for your success, not rigged against your success. I'm so excited about this thing. I've spent literally almost a full decade and hundreds of thousands of dollars, and I don't know how many hours and hours and hours trying to figure out why people struggle having success. And we found the answer. Our research has yielded some really incredible results. In fact, we did a beta test with 18 people where we started sharing these concepts, and within a few weeks, half of those people had a 50% increase in their overall success as traders because they started trading like a process. They started having a much more positive self-talk, and they started having the language they needed to start approaching the markets almost like a professional, with the idea of what's the probabilities associated with these outcomes, right? With my individual trading style, and how do I put that all together so that, like if trading a coin flip, I can't know random, it's random, the individual outcome of individual trades is random, but the random results can still give you predictable results over a number of trades if you dial in things the right way. And today, or this lesson, we're going to talk about what the right way is and what you can do for yourself to dial this in and have yourself become a better trader, and how you can prove it to yourself as well. First of all, know that everything I say to you is for educational and training purposes only. I am not a licensed advisor and I'm not an attorney, but I am a person who has spent literally almost 25 years teaching people how to trade in the markets, and I spent almost a decade and hundreds of thousands of dollars trying to research why people struggle. And everything I teach you today, even though it's for education and training only, right? We're only looking to help you build your education and training only. It's still my sincere desire that you become a successful, consistently successful trader. Now, last time we talked about how expectations can be a roadmap, right? And the importance of having that roadmap if you ever really want to feel financially free and really honestly ever really be consistently successful in the marketplace. It's possible to discover your natural fear of loss level, whatever that is. We call it a trading temperament, but that's really what it is. It's what we are inside of us, how we can handle loss, right? And then once we know that, it's easy to help you then determine from that, these are the statistical results you should expect about loss. What the size of those losses are as opposed to the size of your gains. How many of those losses you'll have in relation to your profits. We'll also talk to you about the frequency or the streaks that you might have in losses versus what your gains will look like. All of that can be dialed in really with great accuracy over a number of trades using statistical probabilistic math. And that's really what the missing piece for part-time traders and for people who have a sincere desire to do a better job in their trading than what their advisors are doing for them, but who maybe are working full-time and don't have the time to really get into this. It's a simple way for you to understand how to trade the markets and to think about the markets, and it gives you language to approach the markets consistently. Just like I asked in video number one, how can you have consistent results from the market if you don't provide or approach the markets in a consistent way? Consistency is the hallmark of successful traders. That doesn't mean they win every trade. You don't have to win every trade to be consistent, and you don't have to win every trade to be successful. You just have to maintain consistency in your approach, and that's what we're all about, and that's what we're going to help you do. Now, in review, we had this slide, the last video. These people who just hate to lose so much that they're willing to sacrifice the potential for larger gains and to get fewer losses and to make sure they're winning more of the time. Those are people who have a high, they want to focus in on we call it frequent winnings. They're looking to find a way to have frequent success when they see opportunities. The people on the other end of the scale are those people who are okay with losses. They're okay as long as the losses don't wipe them out. They really love to win. They love that big win. They love that big gain. They love looking for that opportunity. They go for big prey, right? the jaguars and the polar bears, they're hunting big prey. And because they're hunting big prey, they need to be capable, right? They're going to lose out on that kill more often. But when they get it, they're going to have plenty of food for lots of days. And that's kind of where we're at. We're going to help you understand all of that. Hopefully you'll understand. You've learned your lesson 2. We talked about what your natural trading style is, what your preferred spirit trading animal is, what your natural approach to the market is. Hopefully you've determined that. And I hope that you've are ready to experience how does this all work. Now, what we're showing you now is the key. This is the key for you to be successful in the marketplace. Most people have a hard time trusting it, but we'll get to the end and then I'll show you how you can prove it to yourself. What I'm giving you is random entries. We're just taking a random chart over a random period of time, random price movement, and we're telling you if you want to dial in, say, a win, in this case, a win frequent extreme, a dragonfly style, where you are willing to risk 3 to make 1. It's where you set your exits. So in this case, you would set your exit 3 below where you would set your profit target relative to your entry. So if you just take a random entry and you set your profit target, say 1% above that random entry, and you set your stop loss 3% below that random entry, you are going to win 75% of the time statistically. Now that doesn't mean you're profitable, okay? It's a break-even style approach. All of these, the base winning percentage is a break-even amount, right? But it does tell you, okay, I now know what I should expect. I should expect to win this many times. If I'm not winning that many times, something's wrong. If I'm winning more than that many times, then something's really good and I have an edge and I can define my edge. And that's a powerful thing as a trader, to know what your edge is and how you can define it. Not only is it powerful to know that, it's powerful to know that because you can then improve it. And that's what I get so excited about, giving people the opportunity to improve their edge. If you're a falcon, right, another version of win frequent, then you are willing to risk 2 to make 1. So you would set, and relative to your entry, again, right now, we're just talking random entries, you're setting a stop loss at 2 below where you would set your profit target. A wolf style trader, they are trying to leverage any opportunity they can find. They're looking to leverage their money or protect the assets they already have. They will set profit targets and stop losses relative to entry the same distance. So in this case, it's 1%. 1% above and 1% below is where they set their profit targets. That's the wolf style trader. Jaguar style traders are more like win big. They're willing to risk 1 to make 2, okay? Remember, these are random entries and it's all based on where you set your exits. Meaning, if you were to trade, instead of flipping a coin 100 times to see how many heads or tails you get, you're gonna make paper trades 100 times, or in this case, only 30 times, because that gives you a statistically relevant sample size. And instead of just having a 50-50 chance, you're gonna set profit targets and stop losses relative to entry, and you're gonna dial that in, and you're gonna take the trades. You're going to journal your results. We want you to prove this to yourself because it's such a shift. It's so different from what any other service will teach you. It's so different from what anybody else knows. Only the professionals on Wall Street really understand this. But by learning what we're teaching you, you will be able to approach the markets in a more consistent way. And you will have more consistent success, or what I like to say, repeatable success from the markets, because you now have tools and techniques that can be used so much more than you could have ever done in the absence of all this stuff, right? If you don't have this stuff, then you're just hoping and wishing and praying for a profit, right? You buy something, then you hope, wish, and pray that it turns into a profit. If you're a polar bear, then you are a win big extreme player. You're going to risk 1 to make 3, meaning you'll set your profit target way above 3+, right? Way above your entry, and your stop loss way below. Now, in our coaching, we actually talk about how you can change a trade. You might start out with you're risking 1 to make 2 style, but in certain situations, you can actually take the lid off and let that trade keep going. So you're not limited to the risk 1 to make 2. One of the edge techniques we talk about is how you can, in certain situations, find or remove the profit target and turn that into a trailing stop, and now just let it run and run and run. And then you have this monster winner, but you also know exactly why you got into it. You know exactly when you're going to get out of it, and that has to do with the stop loss. And you know that you're looking for win big extreme style payouts on that particular trade. But it's a rare event, but it does give you the ability to adapt your trades with language that makes sense, with a logical approach to the markets, where you're learning risk management techniques. The best players on Wall Street, the smartest players on Wall Street, they're the market makers, right? And their whole goal is to manage their risk. They do a lot of things in the marketplace to create a market, and they take on enormous risks to create that market, but they mitigate that risk by managing that risk. They understand what that risk is, and they manage that risk. And we're going to help, already we've helped you understand what the risks are, and we're going to teach you techniques for mitigating that risk, just like the professionals use, so that you can improve your results. We want you to prove this to yourself. On this page, you will see a 4th video that talks about the rules of the chart game. It tells you how to log into the chart game. It allows you to download a win big style spreadsheet that has everything plugged in for you automatically, that you can just go through the chart game, do 30 trades. And when you get to the end of 30 trades, ask yourself, with those random entries, but the very specific exits, did you have the expected result? In a win big style, you're expected to win between 35 and 45% of your trades. Well, between 30 and 40% of your trades. That's about what you're going to win. Okay? Did you meet that expectation? You're going to, your losses will be about half the size, or they will be half the size of your gains, because you're just going to follow the rules. You're not going to try and take the lid off and try to capture more profits. You're just going to get out at your profit target and get in, or get out at your profit target on the upside or the stop loss on the downside. You're not trying to game the system. We're going to assume that you're getting in at the open because you're a swing trader and you're working full time. You don't have time to really be in the markets during the day. So you'll look at the trade at night, you'll get in at the open the next day, and then you'll just set in your, we're just going to assume you're going to set the orders in your broker for profit targets and stop losses. And when it hits that price, you're out. It doesn't matter if it hit the low side or the upside, or if it flipped the price the next day. As soon as it hits that price, you're out of that trade. And you note that in your journal, and that's going to do that 30 times, and that's what gives you the statistical results to prove to yourself what we're talking about. Now, we would encourage you, if you have the time, to do it more than once, because the more times you do it, the more confident you'll be in the fact, in several things. But first, you'll understand and have more confidence in, there is a statistics to this. I can take random data in a random market with random individual outcomes and get a statistically generated, statistically true result, right? Consistently. That's a powerful thing. That level of confidence is so powerful for traders. It will, so you gain confidence in that base winning percentage, first of all. It also helps you understand, when you do that more than one time, you deep down go into the process of, I don't have to be a gambler. I can be a trader. I can be a not that you're a professional, but I can get statistical results. Think about all of the confidence that comes with that you can get consistent results, repeatable results, time after time after time. All of a sudden, you can see a light at the end of the tunnel, where you start to understand, I can have financial freedom because I know these truths. I've been able to make this happen for me. I hope you go in and take that assignment on. It takes about an hour to watch the video and do the first 30 trades. I hope you do that, because it's such a powerful thing that's been missing in every human, every person that I've ever worked with, the thousands of people that I've worked with that have spent thousands of dollars trying to figure out how to trade better. This is the piece that's been missing. And this is why so many struggle to take the education that they paid for and turn it into anything, because they didn't have this component. But now you do. So please go make it happen. Thanks.